Hi everyone, Alex from Summerhill, just with another quick video update. Now, as we all know, the government handed down the federal budget last week. From a wealth perspective, there was largely no surprise with the budget. The announcements were limited and had mostly been communicated prior to the formal budget speech. But today I wanted to summarise and cover off the impact of some of the budget measures from a wealth perspective. Firstly, some of the cost of living measures. As has been well publicised, there will be an energy bill relief which will provide savings of up to $300 for all households and $325 for eligible small businesses. This will automatically be applied to people's electricity bills commencing July 2024 in quarterly instalments. Deeming rates on financial investments that are used to calculate eligibility for various government income support payments will be frozen at the historically low levels for another 12 months until July 2025. This may enable a higher level of support payments to continue for the next 12 months for those that are eligible. Next, there were student debt indexation changes. So for those of you with kids that are studying, if they hold a higher education loan program loan, so more commonly known as help debt, they will benefit from changes to indexation, which involve debts now being increased by the lower amount of inflation or wages growth. Currently, these debts are indexed to inflation. So this will benefit all Australians with help debt, fixing the issue of last year's spike in the inflation rate, which resulted in help debts increasing by 7.1%. So the change to indexation will be backdated to 1 June 2023, reducing the previous indexation rate of, like I said, 7.1%, which was based on inflation, to 3.2%, which is based on wages growth. All help loan accounts that were indexed on 1 June 2023 and subject to indexation this June will receive an indexation credit. As an example, an individual with the average help debt of $26,500 would see around $1,200 wiped off their outstanding help loan this year, pending, of course, the passage of legislation. We've included an indexation credit estimator calculator in the email if any of you are interested. If any of you are considering making voluntary payments to reduce your kids' help debt, we encourage you to contact us first to review your goals and discuss options. Moving on to personal taxation, the main cost of living measure is the previously announced revised Stage 3 tax cut, which take effect July this year. These tax changes provide tax relief to all taxpayers. No further changes are proposed to these revised personal tax cuts, with legislation already being passed. We've covered off on these tax changes in previous videos, so I'm not going to go into them again, but we have attached a summary to the email of the new tax rates and the thresholds that will apply to tax residents from July 2024, along with the tax savings you can expect to receive. Now, the largest tax saving of around $4,500 applies to those who have taxable income of $190,000 or more. So the obvious consideration here is what to do with your tax savings. As was covered off in the previous video, you may wish to consider pretending that the tax saving didn't exist and using those savings to build wealth rather than spending on lifestyle. For example, the tax savings may provide more scope for making additional tax-deductible super contributions, which may create further personal tax savings. Alternatively, using the tax savings for reducing non-deductible debt or investing personally are obviously other options. We will discuss options with you personally at your next planning meeting, taking into account your goals and objectives. Moving on quickly to business taxation. Now, for small business taxpayers, the $20,000 instant asset write-off announced in last year's federal budget has been extended for another 12 months until 30 June 2025. So businesses with aggregated annual turnover below 10 million can immediately deduct the full cost of an eligible asset costing less than $20,000. The 20,000 threshold applies to each eligible asset purchased. So small businesses may wish to consider acquiring eligible assets and taking advantage of these upfront tax deductions. Moving on to superannuation. Superannuation was largely left unchanged, although the Treasurer did announce plans to pay the 12% superannuation guarantee contributions on government-funded paid parental leave from 1 July 2025. So this is a positive thing. This will help reduce the impact of time out of work, help reduce the impact on retirement savings for those taking time out of work to raise children. When it comes to superannuation, I guess what was most surprising about the budget were the items that weren't mentioned at all. There was no further announcements made on last year's budget measure to introduce an additional tax on super earnings for those with more than $3 million in the super system. This is known as Division 296 tax. This bill is still before the House of Representatives. As per our previous video, the proposed method to calculate earnings and its effect on taxing unrealised capital gains have been controversial, but the lack of further announcements in this budget is an indication, I guess, the government intends to continue to legislate for this change effective July 2025 without any changes to the measure or its calculation method. We will continue to watch this space closely and will contact you directly if legislated or if these changes will impact your financial strategy. There was no announcement on relaxing residency requirements for self-managed super funds. The former government announced plans in May 2021 in the federal budget to relax the residency requirements for SMSFs by extending the central management and control test from 2 to 5 years and removing the active member test. The government made no further announcements regarding this measure. And no announcements was made in relation to the modernising of individual tax residency rules. The former government announced in the 2021 budget as well that it intended to replace the individual tax residency rules with a new modernised framework, which will be much easier to understand and apply in practice. The government released a consultation paper on this matter in July last year, and the consultation process was finalised in September. However, the government made no further announcement about this measure in the budget. So that's it. That's it from us for today. As always, it's important to remember that at this point, most budget announcements are only statements of intended change and are not yet law. The specifics of each of these changes will be discussed with you at your next planning meeting. Please contact us if you have any queries in the meantime. Thanks.